Good morning and welcome to today's pre-market video. Now in today's pre-market video, we'll take a look at the Sensex index. I'll take a look at what option buyers and option sellers can do with it. Plus, I'll share my detailed trading plan for it. Now, before we do that, let's take a quick look at the news, as it is pretty significant today. Why I say that is, firstly, on the local front, there's only one major news. The Indian Consumer Price Index numbers came out, and in November, it came at 5.48% compared to 6.2% in October. This higher inflation number of 5.48, it's lower than October, but it's still high. The inflation number is primarily due to things like vegetable prices. For example, the vegetable price inflation level stood at 29.33%, which is a reduction but from 42% in the prior same duration. So that is the one factor that is horribly affecting the inflation numbers, and is one of the main things which I believe will hit the common man's wallet, as when they go to buy food, they're going to feel it. On the global front, the US CPI numbers also came out. The wholesale prices rose by 0.4% in November, and if you remove food and fuel, it's only up 0.2% on a month-on-month basis, which is, according to me, okay. Then on the rate cut front, the last 24 hours we have had 3 central banks give good rate cuts. First, the European Central Bank gave a rate cut of 25 basis points. They said they want to do economic recovery and engineer growth in the European economies. And Christine Lagarde did not pre-commit to a certain particular growth path, but she said there is room for more rate cuts next year, even though they've already done 4 this year, as she wants the economy to grow and not stagnate, the economies to grow and not stagnate. Plus, she believes the European economies will need more support next year, as Trump is coming in America. He wants to put tariffs on the whole world. Europe is going to be hit by that, so that's one of the reasons she's keeping that door open. Then the Swiss did 50 basis points rate cut. This is the biggest they've done in 10 years due to uncertain global economy, plus they want to also revive the growth. Bank of Canada went and did a 50 basis point rate cut, again to engineer the growth. So basically, we have seen 3 central banks do rate cuts. Only our guys are still asleep. They've not even started the cycle, while ECB has done 4. They don't seem to be interested in growth, but that's a different issue. Now, on the next, China basically has pledged to increase their budget deficit by issuing more debt and losing monetary policy to maintain a stable economic growth rate, as it gears up for more trade tensions due to Trump coming in to the White House. These remarks were read out during an annual agenda setting meeting of China. So basically, on the news front, globally, 3 central banks gave a rate cut. China is softening its stance on monetary policy, plus is ready to release more money into the economy to let the economy grow. So for the global economies, that's very good. For the Indian news front, the only thing in inflation is still pretty high, and it's one of the reasons the RBI governor had said he doesn't want to reduce the rates, but the issue now, he's starting to smash the growth levels, and it's something that I hope the new guy tends to sort out. Now, we move on to the Sensex, and now when the Sensex analysis I'm providing today is on the 13th December futures. Now, some who are watching are not understanding why I'm highlighting the specific expiry chart I'm using. This is, for example, if you look at the Sensex index futures of 13 December, they closed at 81,360 on Thursday. But if you look at the monthly futures, they closed at 81,660. That's a clean 300-point difference. So if you're doing option selling or option buying in the Sensex index, for example, and you're trying to base your trades on the monthly futures chart, and you're trading in 13th deck options, then you're trading on the wrong information, because you're simply doing it's the wrong prices, wrong charts, everything. There'll be 50-60% similarity in the price patterns, but the price levels are completely different. For example, if you've gone and sold an option in using the monthly, on the monthly it might be out of the money, but in the actual expiry, which is expiring, it might be in the money, and you're wondering why you're getting thrown around like a yo-yo because you are not used to in the money option trades. So that is why I specifically highlight which month I am doing, which week I am doing, basing the levels on, as that is very important for anyone who is putting the trades in any index, whether it's the Nifty or the Sensex. The other guys have been killed by SEBI, but also now only these two for weekly. Now, before we also go into the thing, since Christmas is coming, again a Christmas offer has been put for all my services. So if you're interested in getting a discount up to 20%, then WhatsApp the number shown in the description box below, and one of my guys will guide you on how to get it. Now coming to the video, now I've loaded the Sensex on a 10-minute chart due to how stagnant we have been. Yesterday in the Nifty expiry video I had also shown that from 5th of December we have not moved. 5th to 12th we have not moved, so today 13th we are opening and hopefully we make a move. Why I'm saying hopefully we make a move, as the whole week we have not had a move, so everybody is frustrated. So there are going to be a lot of traders who are just going to come and trade for the heck of trading, because they want to try to make something at any cost, and those guys are going to hopefully create enough volatility for the guys who are trading based on logic and technicals to make money. That's how I am counting on it. And now, what is my option buying and option selling trading plan? Now first, on a general analytical point of view, according to me, as long as Sensex is between 81,640 and 81,200, there is not much an option buyer can get apart from scalping. Now I know some will say, okay, but how can you call it scalping when it is a 400 point range? Remember, this is a 81,000 rupee index. So 400 points is nothing, literally. It's a blimp on the 81,000 price level. So it's something that I won't bother, and this ends up becoming a scalping range because of simply the high price of the Sensex. Now between this, I don't think option buyers are going to make much. You're going to make a small profit here and there, but you're going to be taking a lot of risk. As we can see, we're between this zone. Okay, it might be a 400 point zone total, but candles are about 20-30 points and they're just stagnant. So you'll end up getting completely hammered if you try to do option buying within this range. So according to me, if you're an option buyer, only buy options if it breaks 81,640 or it breaks 81,200. Now if it breaks 81,640, it's got another key hurdle at 81,750. If it manages to clear these two, then it's going to 82,050, 82,250 and 82,440 opens. 82,050 is the most important one, and 82,250. These two are the very important ones if this zone breaks. On the other hand, if you break 81,200, then first is a short to 89.50 and 8800. This will be a support zone that's going to show its mantle. If it breaks that, then 8400 to 8450. So option buying is a pretty simple trading plan. Do not enter between 81,200 and 81,640 unless you're a scalper and are very good at scalping, because that range you're going to get completely butchered if you try to play around with it and you're not good at scalping, because even the brokerage charges are increased, and even they've brought funny charges on our, if you look at your contract notes, investor protection fund and many other things have come up. So the charges have gone way up, and 400 points in the 81,000 index is not going to give you anything good really. Now, what is the option selling trading plan? Now option sellers, I think due to how stagnant we have been, we cannot say we're going to sell one side and not sell the other side. Plus the news front, we have been basically on the local front we have bad inflation numbers. Inflation numbers, according to me, yes, most news media like CNBC and all are saying it is okay. It is coming in line with expectations, but it is a still high number. On the global front, good rate cuts, everything's happened. So we are getting hit by a conflicting amount of conflicting news basically, because the global news will affect us and the local news will affect us too. So according to me, if you're an aggressive option seller, then sell 81,640 and above calls and puts below 81,200. If you're cautious, then 82,050 and above calls and 89.50 and below puts. Why am I choosing to sell both sides? We have been stagnant from 5th of December. We don't know if this stagnation is going to end or not. So it's better to sell both sides. If the market starts moving, one side you will get stopped out, and most likely you'll get stopped out by a profit stop, because if you enter it gradually across the day, you are going to get your position in option selling is relatively going to stay in profit, because sideways movement plus expiry day, decay is going to come pretty easily. So the profit stop will cash out on one side and let you take a small earning from that, and the other side will ride on until 3:30 and give you the full profits. If by chance we don't get movement at all, then both sides will ride on till 3:30 and you'll get money on both ends via an option selling. So that's my trading plan. Cannot say that, so like I usually do, I'm going to sell calls more or not, because we are completely stagnant, we are not moving. So you just have to play what is given to you, and this week has been like that. I love option buying. Option buying has not been much opportunities this week. It's been more for option selling, so you adapt and do option selling on both sides. So that's it for the video. If you liked it, then hit that like button and subscribe to the channel, and also click the notification bell. Thank you.